Well, good morning, and thank you very much for having me on. And just quickly about the airline breakfasts, it's kind of hard to screw up yogurt. I think that's basically what I get every time I'm on a early morning flight. Um, Watching the data, watching. I think inflation is probably like the biggest report right now to keep an eye on. But of course, this morning's retail sales numbers were also very interesting, and I was very torn. I got to tell you this, I was very torn. I was like, do I want a strong number to signify, that the U.S. economy remains resilient, or do I want a weak number because it shows that the Fed is going to have to start cutting rates starting next month, and by how much? So I was torn, but I kind of lean toward, I want a stronger economy, a more resilient economy, and the retail sales numbers proved that. It wasn't wall-to-wall strength. We saw some pullback in things like eating out, dining out, for example, which is something I like to keep an eye on all the time. But there's more spending on things like sporting goods and on clothing and things like that. So cannot write off the U.S. consumer just yet. We should almost never write off the U.S. consumer, but it shows that again the U.S. economy is still holding up there. The backward revisions, by the way, show that there's a lot more momentum coming into the second half. But what happens at this point on with signs of higher inflation bubbling? This is where
Yeah.
everything hits the fan.
My summary, Paul, is simple. What now? We wait. We watch.
Exactly. So, Jennifer, what do you think, or how do you think the Fed interpreted this week's inflation data and today's retail sales? How do you think that may or may not affect kind of what they do in September?
I think it potentially makes them dig in their heels a little bit. And there is talk about a 50 basis point cut, perhaps maybe from just one individual with the initials SB. But I think the inflation reports this week sort of put that put that on the side, at least off the table for now. 25 basis points still looks like the way looks like what we're going to be seeing come the next meeting in September. Again, we still have, we just had like the two pretty scary, inflation reports this week for July, but we still have, and then of course this morning's hotter than expected import price report that you've already mentioned. So we've got one of each, by the way, one more CPI, one more PPI, one more import price report before the September 17th Fed meeting. We also have a couple of ISM surveys, and I always love to read those because I like to see what the respondents out there are doing or what they're seeing in terms of prices. And those are like the boots on the ground, right? It's not these numbers that are being calculated in whatever format and whatever fashion. These are actually talking to the people out there who are making their purchases, the actual purchasing managers, and we want to see what they are seeing out there.
What do you make of the U.S. labor market here? That was the discussion point a week ago. This week's been all about inflation. Last week was about labor. What's your take on the U.S. labor market?
So this is, obviously the last report was a little shocking, showing like slowing demand, but there is still demand for jobs, and we still have, well over 7 million job openings out there across the country. So, it depends on what sector we're talking about, but clearly demand is slowing. But it's also interesting, just given from what we've seen from some of these surveys, from what some of the hiring managers have been saying, they're basically holding off to see what happens with the economy, what happens with tariffs. Is this trade war with China going to continue dragging on or not? So that's going to determine whether or not they're going to be starting to get rid of people, or if they're going to lay people off or hire. Everyone is on hold right now until there is more clarity. We have a little bit more clarity now, but it's still not 100%. It's still a little fuzzy.